Hi, this is Mike Bjorkman. Thanks so much for joining us today here on Minute with Mike on SCV TV. I'm really excited to announce today I have Eric Mitchell with me. He's from Priority Financial Network, and he's just a wealth of knowledge with loans. So we're going to do 3 segments. Make sure you catch them all. And what we want to start out with right now is, first of all, Eric's been in the business for what, 14 years?
14 years.
14 years. So he's been able to see both markets like I have, and we're really excited to have such a wealth of knowledge. Today, the biggest thing from all the agents in my office is condos and FHA financing. If you don't know, it's almost impossible to get FHA financing on condominiums right now because HUD has not approved these complexes.
Right. For a condominium to be HUD approved so that you can get an FHA mortgage to buy a condominium in that building, the association of the building has to apply to HUD, which is a government entity. So
right.
By definition, it's not going to be a pleasant experience right. applying for that HUD approval. And so if the building is not on the HUD website as an approved HUD building, you can't get an FHA loan to buy a unit in that building. And so it becomes very difficult when most condominium buildings in Southern California are not HUD approved. If you're an FHA buyer with a low down payment and you want to buy a condominium, how do you find a condominium to buy? And those buyers are having a tough time in the market right now.
Right. So let's back up a little bit. For those of you that don't know, FHA you could buy with 3.5% down. And that's the beauty of FHA, right? So the problem is, typically, what is the down payment necessary for a condo if it's not going to be FHA approved?
Typically, if it's not FHA approved, you're looking at conventional terms, which is typically a 20% down payment.
Right. And then, am I right or wrong to say then even we still might have some problems with financing?
Yes, depending on the condominium and what's happening inside the building. What we're looking at and what all lenders are looking at is, what is the collateral that we're dealing with? There's one unit in the building, but we have to also look at the building itself. So how many of the units are owner-occupied versus how many of them are non-owner-occupied, meaning that somebody's bought a unit in that building, but they're renting it to someone, right? They're not living in it. Because when you've got a building that's mostly renters, the building's treated differently.
Right.
So the collateral is slightly less attractive, less marketable. You look at how many of the units are owned by one person. So one person owns more than 10% of the building, we have a problem. If the homeowner association has a lot of delinquencies in the monthly payments from owners that might be in foreclosure or in trouble, then you've got financial problems with the building. So it's not just about the condominium itself,
but reserves and all kinds of stuff.
Absolutely. And so a lot of times, even if the building's not HUD approved, you still can have challenges with the building.
Right. So today what we really wanted to talk about, which we're absolutely excited for, is 97% financing, which is 3% down on a condo.
3% down, even if the building is not HUD approved now. And we're really excited to be able to offer that now. So all of the condominium buildings that are not on the HUD website,
which is all of them in Santa Clarita for the most part. There's only 2 or 3.
Yeah, it's very few in all of Southern California. And so now, even though that building is not HUD approved, as long as it's considered warrantable, and that's a technical term, but meaning that the building has the right ratio of owner-occupied versus renters, that there's not one person that owns more than 10% of the building, the association is in good financial standing, etc. We are now offering 97% financing for those non-HUD approved condominiums, and it's just amazing.
I might be opening up a can of worms here, and I'm good at doing that. Who determines if the building's warrantable now through these particular lenders offering the financing?
Well, we send a questionnaire to the association to fill out. It's a 1-page questionnaire that asks the questions. And they answer the questions, sign it, and as long as the questions are telling us that the building's warrantable, the building is it's not gray. It's very black and white.
Right.
The building's either warrantable or not warrantable. If the building's not warrantable, most lenders won't lend on it at all. We'll still lend 80% on a building that's got challenges. There might be some open litigation in the building. There might be some structural challenges. We'll still do 80% non-warrantable. We'll do 97% warrantable that fits the traditional guidelines, and then we'll still do FHA financing if the building is HUD approved.
Okay, so again, me and my can of worms, there's got to be some kind of catch. How about the interest rates?
No, interest rates are conventional terms. you're looking at mortgage rates in the 3s still. There is monthly mortgage insurance, but it's less than FHA.
Okay.
So it's less expensive than FHA mortgage insurance. You do need to have, if it's the condominium at 97%, you've got to have a 680 credit score.
680 or better.
680 or better credit score.
But that's pretty typical for FHA as well, right? I mean, some banks we can go as low as 620, right?
We actually go down to 580 on FHA. So, a little tighter restrictions on this.
Okay. Well, they have much more of a risk, right?
Yep. We're just grateful that it's available.
Yeah, right.
Right. There's some kind of option for people in the marketplace right now.
So for what I'm getting from you, there's not really a catch. You got to be a good qualified buyer. That's okay. That's the same with FHA. Is there anything as far as how long it takes to close the escrow? Is there any other thing that we could be worried about?
No, we're closing under 30 days. If I'm watching this video right now and I own a condominium, I would want to contact a realtor that knows about this program to list it effectively. and truthfully, I mean, if you're the listing agent and you're putting it on the multiple listing service and you're putting in the public comment section, 97% financing available for this condominium, I mean, you're going to have 50, 60 offers that day on that condominium, and what happens to the value?
Right.
It goes up. And
bidding wars.
Yeah, you're getting a lot more for the building. You've now increased the value of the entire building, not just your unit. I mean, everybody benefits from the listing side having access to this.
That's awesome. Well, I really appreciate you talking about that loan with us. Eric, there's going to be lots of agents, lots of my past clients, Sphere of Influence, watching this video. If they have more questions, they know they can call me, but how do they get a hold of you if they want to get some more information on that?
Best way, toll-free number is 888-696-1344, 888-696-1344. You can listen to the prompts, or my direct extension is 729.
Awesome. Well, guys, there you have it. I'm always focused on bringing you bigger, better things in real estate to help all of our buyers and sellers succeed in any market, and I think we've accomplished that today. And again, my name is Mike Bjorkman, 661-212-8075. For the rental property, it's scvleasing.com. For the sales, SantaClaritaRealEstate.com or .info. And thanks again for watching Minute with Mike here on SCV TV. Have a great day.